All right, I think we'll go ahead and get started. We are videotaping this. Oops, I almost just ended the meeting. We are videotaping this, so if people jump in late, they can catch up. First of all, I want to welcome everybody to the meeting. My name is Jim Pfeiffer, and I run coin meetings with a number of other guys who I do not see on the meeting yet. I hope everyone is healthy and doing okay and able to stay home and be safe. I just briefly wanted to mention before we get going too deep into it, Michael Geffert is not on, but he had mentioned in the Facebook group after our first virtual coin meeting that it might be nice if people would buy a gift card or two from the Smokehouse Brewery. They've supported us and for where we had our meetings, and since we can't go there anymore, but we hope to be back, that might be a good idea to buy a gift card. So if you can do that for them, that would be fantastic. Also talking about our Facebook page, we do have a page you can go ahead and join. I ask that you don't put any property information that you're trying to sell or buy properties on there. I've been a little bit lax on some of the company advertisements given the situation. You know, I don't want to cut people off, but if things get obnoxious, we'll have to delete that. So I just wanted to mention those. Real quick, we've been trying this year to do success stories of coin members who have done business together. And were this a live meeting, I would ask people to raise hands for who's done business with someone in coin. And you know, we've been getting 30–40% of the people raising hands. And then I ask who's done business with coin with somebody they met through coin. And that's still, you know, we still get most of those hands stay up. So since I didn't get any emails from people about success stories, I know they're out there. So I would like to ask again for our next meeting, if someone can send me your stories, that would be fantastic. I'll briefly share a couple of mine. I sold one of my 8-unit multifamilies properties through someone that I met through coin. I'm currently using who I call our coin local attorney. Michael Geffert's helping me out with an issue I have and doing a great job. And I met him through coin. And then I also do a couple of private lending deals through people that I've met through this group. So I'm hoping, probably not next month, but hopefully sometime during the summer, we'll be back together again and we can continue our networking, because this format online is difficult for the networking. But we hope to get back in that very soon. The May meeting will be May 19th. It's going to be virtual. I can't imagine we're going to be getting together. I'm waiting on the topic and the speaker because I want to see what is relevant then. Peter was not scheduled to speak with us for the April meeting, but it made sense given what he does and what he's going to talk about. And so tonight we have Peter Lohmann from RL Property Management. He's spoken at Coin before. He comes to our meetings, and we're really grateful that he does that. And he's going to talk about all things property management and give us some insight as to, you know, I know people are dying to figure out who's paying rent, who's not, and how to manage that stuff. So he's going to open up just kind of talking and explaining some things and giving a presentation. And then if you want to write some questions in the chat, I will try to, at the end, I'll ask those of him. And then we can also at the end open it up for questions that you have that you want to ask. And instead of writing in the chat, you can just go ahead and ask him if you unmute at the end of his conversation. So with that, I'd like to welcome Peter, and thank you very much.
Yeah, thanks, Jim. I'm happy to be here. Hoping to provide a lot of value for everyone watching with some of the data and information I'll be sharing today. So let me just jump right into it. I'm going to start by talking about rent collection here in the time of coronavirus. So we really, you know, here in Ohio, we went on lockdown like halfway or 3/4 of the way through March. And so April was really the first big test for rent payments since all the changes. So I went back and I did a bunch of research to figure out what is our normal rent collection rate, so to speak, or what is the delinquency rate is another way of asking that question at different times of the month, so that I could try and get a handle on what to expect for April and compare that to, say, the average of the last 6 months. So let me go ahead and share my screen here. Give me a second. All right, I'm going to assume you guys can see that. So, you know, I don't normally share these types of numbers with just about anyone and everyone who cared to show up to the meeting today, but it could be helpful for people, and these are crazy times. So what this is, you can see a record of our total rent roll going back about 6 months, and you can see the amount of outstanding rent as of the 6th of each month.
Hey, Peter.
Yeah.
I'm really sorry to interrupt. I am not an expert Zoom meeting person, but somehow I had a bunch of people in the waiting room who I didn't let in. I don't even know how I have a waiting room. I guess I need to practice my Zoom skills a little bit more, but we just added, we just added 15 people. So if I know you just started, but if you could start again, just so those people are updated, and then I'll pay attention. I'll add them as they come. So my apologies for that, everybody. Go ahead, Peter. I'm sorry.
Yeah, no problem. And I think, Jim, if you look in the settings, there might be a way to turn that off. But anyway, so yeah, I was curious what to expect for rent collection on our rental portfolio. So just a brief background. I own RL Property Management. We're a residential property management company here in Columbus. We manage on the order of 400 some rental units all throughout Columbus. It's a mixture of single family and multifamily. We manage everything from single family duplexes, fourplexes, 20, 30, 40 unit apartment complexes. So it's all over the map. It's all over the place geographically. Our average rent is between $900 and $1,000, just to give you a feel for it's mostly what I would call class B, maybe like B minus, C plus. So I was curious, you know, and I thought it'd be helpful with the group to share what rent collection looks like at scale during the time of coronavirus. And I really got started with this project in late March when I realized that a lot of our tenants were likely getting laid off or furloughed from their jobs. And I wanted to know what our rent collection was going to look like for April. So I pulled some data together, and you can see that here. We've got our total rent roll here, our outstanding rent as of the 6th of each month, except if the 6th was a Thursday, I went ahead and used the 7th instead because a lot of people get paid on Friday. And it ended up making the numbers a lot more consistent. So you can see that during the last 6 months, with March being the most recent normal month, we averaged 11% delinquency as of the 6th of the month. I want to clarify that doesn't mean that 11% of our tenants aren't paying rent. It just means that 89% of them had paid by the 6th, with most of the rest of those tenants paying over the coming days and weeks into the mid-month. We have an eviction rate of less than 1%. So I would say 99% of our tenants pay rent on average during normal times. So you can see April highlighted here. As of the 6th of April, we had $61,000 of rent outstanding, which was a 15% delinquency rate. So that was higher, of course, than our average, but not by much. I was expecting a little bit worse, to be honest. So I was pretty happy with that. If you're curious, today we've collected 97% of rent for April. We're down to just a 3% delinquency for April. So I'm guessing that mirrors what a lot of you who own rental property are experiencing. Chances are most of your tenants have paid rent. There's definitely a correlation between the asset class and the rents collected. So the higher up, the higher the rent, the nicer your property is in the nicer neighborhoods. You're probably having better luck collecting rent because those people are just working from home. Whereas at the lower end of the spectrum, I would imagine those tenants are having more trouble because they may have just been straight up laid off if they worked in food service or what have you. So that's rent collection. Of course, all eyes are on May. That's the big question. What is that going to look like as of May 6th? We don't know yet. Obviously, it's a little early to be hearing from tenants on that front, and so we're going to be. If you connect with me on LinkedIn, I post these updates pretty regularly. I'll do like 2 or 3 a month, just sort of talking about where we are and sharing some of my thoughts and what I'm hearing from tenants and clients. Okay, next I wanted to talk about if you own rental property, how can you still conduct showings and continue to fill vacancies right now? You know, business marches on, property management is considered an essential business, and those of you who own rental property, it's certainly essential to you. You know, tenants are still moving. Tenants are moving out. Tenants are being, you know, looking for alternate housing. Vacant units that have been getting turned are finished and ready to lease. And so we sort of geared up once we realized we were going to be in this for the long haul to make sure that we could still turn over properties and get them filled during coronavirus lockdown. So we have for years used self-showing lockboxes. So some of you may be familiar with that, some of you probably aren't, but there's been some technology that's come out over the last 5 years or so that allows tenants to schedule a showing themselves with a credit card or other forms of ID that you can choose, go to the property at a certain time with a temporary code that's issued, use a lockbox to get a key, see the property, tour it themselves, and then lock up the key on their way out. And of course, you need a special lockbox at the property to do this. And there's a few different vendors that offer the service. We happen to use one called Show Mojo, but you can use, there's Rently, there's Tenant Turner, there's a few of them. So we have been using this technology for about 3 years. We had used it in a limited basis on some of our nicer properties and single family homes. We found that it helped the properties lease faster, and it was, in some cases, allowed us to command a higher rent because tenants, a lot of the good tenants that you want living in your rental homes, you know, during the day, they're at work and they may be looking at rental properties on their break if they're thinking about moving. And what you really want to do is lease to those tenants, not the guys who are sitting around with nothing to do during the day, which is when a lot of the showings take place. So these self-showing lockboxes allow someone who's at work to view a property they like, schedule a showing for 5 p.m. They can stop in on their way home from work, take a quick look, and then if they like it, they can apply, you know, after they eat dinner or even right there in the unit with an online application. So that's all great. You know, a lot of people have safety concerns around this. It's something that it takes a little bit of getting used to. We've never had a problem. We've probably leased, I don't know, close to 100 properties using this technology, and we've never had any type of a security issue. And so what we did leading up to, and once we were in this, is we ordered a bunch more of these boxes. So we had, I think, only 4 or 5 of them that we would move around between properties. And now I think we probably have 12 boxes that we pretty much keep on all of our listed units. So let me share something else here to give you a sense of what that looks like in practice. Okay, so what you're looking at here is a graph showing the number of showings going back to July or August of last year. So what it really is it's showings per unit per week. So early on in the graph here, you can see it's hovering around 2. That means we had an average of 2 showings per listed unit per week during that time frame, which is about right. I mean, you don't generally want to be going to a listed unit every single day if you can help it. It's better to group the showings or use the self-showing technology. So you can kind of see the normal trends here as we reach the end of fall last year. It tailed off. That's pretty normal, pretty expected. And during the holidays here in the middle, it's really low. That's, again, pretty normal. You're getting down below 1 showing per listed unit per week. We had a really warm spell toward the end of January, which is this peak here. We had just a bunch of really warm days in a row, and I think it really got people out of the house, and they were looking at rental properties. And then it got cold again, and this severe drop you see, at the beginning of March. That was when coronavirus really started, being all over the news and being something that people were talking about. So we quickly mobilized. We got our self-showing lockboxes ordered and deployed to all of our listed units. And you can see that our listings activity popped back up and is now hovering pretty high, around 2.5 showings per listed unit per week. So we are moving properties right now. To share some data with you, last week I asked my leasing agent to pull this information. Last week we had 22 showings. We received 6 applications and we signed 2 leases. So it can be done. The reason I'm sharing this is just to maybe instill a little bit of confidence and hope in those of you who have rental properties and give you some ideas around what you can do to continue to fill vacancies during this time. It can be done, and I'm happy to share more information about the systems that we use if that's helpful. All right, let me see here. Okay, so next up, sort of a brief detour here to talk about direct mail. I know that a lot of you here use direct mail. I've gotten some of your direct mail, so I know that for a fact. And I had not used direct mail at all before this year. It was something that I knew about, of course, but I had never tried it myself. Now, direct mail is of interest to a property management company in order to stir up interest in new clients. So, of course, we don't own all these properties we manage. 99% of them are owned by our clients who are real estate investors. Some of you are members of COIN. And so, of course, to grow our business, we need to get more clients. And one of the ways to get in front of those clients is with direct mail. So no surprises there, but I did want to share some details about our mailing campaign because I thought it might be interested for folks who are using direct mail or thinking about using direct mail for some of your campaigns. Probably not in property management, but to potentially uncover properties that you can purchase and then either flip, resell, buy and hold, or what have you. So first, let me show you a picture of our direct mail, just so you can get a sense of what I'm talking about. So here's a PDF. This is the front, and then this is the back. We chose to use a postcard. This is like a 6x9, I think. Glossy, double-sided. It's got our information here, what we do. It's got a call to action, all that other good stuff. And so we mailed out, so far we've mailed out 1,800 of these to rental property owners. We got their name and address from the Franklin County Auditor website. And to give you a sense of our response rate, we've heard back from, I think, 5 leads who got our mailer and mentioned that they had heard of us because of the mailer. And I think 2 of those ended up being really good leads, properties that we were interested in managing and that were in a part of town that we wanted, and the client and the property just seemed like they'd be a good fit for us. And one of those turned into a new client. She owns a duplex. So out of 1,800 mailers, we got 1 new client with 2 units to manage, which actually pretty much pays for the whole campaign just in and of itself, because in property management, there's this concept of like the lifetime value of a client where once you get a client, especially if they have multiple properties, they're likely to stay with you a long time. And so there's a certain amount of value there. To give you a sense of the cost, I paid several $100s to have this designed. This is a little bit of a step up from a lot of the direct mail that I think a lot of real estate folks use. And the cost of printing and mailing ended up being about 50 cents per postcard. And that includes the cost of the printer, and then the printer, we use this company called nextdayflyers.com. They printed them off and then they mailed them to a list that we provided. So if you're thinking about direct mail, my experience so far has been positive. We have another batch of, I think, almost 4,000 mailers that are going out here at the end of this month, and that'll round out our total mailing lists, and everyone will have received their first mailer, and we're planning to hit them all over the course of this year several times. If you own multifamily rental property here in Columbus, you may get one. So that's what we're doing there. Hopefully that was useful for anyone thinking about direct mail. Okay, next topic. I thought I'd share a little bit about evictions, maintenance, and turns. So again, if you own rental property, these topics are highly of interest. First, evictions. So I think everyone knows by now that evictions are on hold. Franklin County court system is not processing or holding any hearings for evictions for another few weeks at the very least. I don't expect that to restart here anytime soon. You may still file evictions. So if you have a non-paying tenant and they have not paid April rent, you may file that eviction down at the courthouse, and it's going to be first come, first served once they start holding hearings again. Now, something really important about evictions that I didn't know until earlier this month is that if your property has a mortgage on it, and that mortgage is federally backed, meaning it's Fannie, Freddie, FHA, VA, some sort of HUD, Section 8, anything like that, you are not allowed to file evictions or collect late fees from those tenants for 120 days from from when the CARES Act was enacted. And I think that was like March 27th or something. So for 4 months, no late fees and no eviction filings, you can't even file. So if you own rental property and you have a mortgage on it, you should double check to find out if it's a federally backed loan, because if you attempt to evict a tenant from that property, you could be in a lot of trouble. So we've been working with our clients on that to make sure we keep them out of trouble.
Hey, Peter, real quick for a point of clarification. My understanding is that the eviction prohibition is only if you take advantage of their forbearance offering, that if you're paying your mortgage and you're not participating in any kind of a forbearance program as a result of the CARES Act, you can still foreclose or you can still evict. Could you clarify that, please?
That's correct, but I am not a lawyer.
Michael, would you have any insight to add to that by any chance?
For the good of the group, I will look into it and I will send an email to Jim to forward on to everyone.
Very good. I ran this by our eviction attorney, Dana and Preezer, Allison, and that was our understanding, but I'd be thrilled to be wrong about that. So let us know. Okay, so that's evictions. Maintenance. So we have an in-house maintenance team. We have 4 guys, W-2 employees that work for us that take care of a lot of the day-to-day maintenance at all the properties we manage. And, maybe it goes without saying, but I'll confirm, we pretty much have a pause on non-emergency interior maintenance at occupied units. So if a tenant calls up and says, hey, my closet door's off the tracks, first of all, that might be a tenant responsibility item anyway, but maybe that was a bad example. But unless there's a big issue at a property, we're mostly telling tenants, hey, we're going to get back to that once the state opens back up. And really, tenants don't want people coming in their house anyway, so that's not too much of a big deal. We generally perform quarterly inspections at all the properties that we manage, and that is on hold right now. So that is not taking place. So that leaves exterior maintenance, which is just kind of getting going here as it's been warming up, and then vacant unit turns, which there's no issue doing at a non-occupied unit. So we're keeping our guys busy with that. We're kind of filling them in with other projects because we want to keep them around. They're good guys. They work for us for a long time. Okay. So next topic, I wanted to mention kind of briefly that we actually, great timing, we actually closed on the purchase of another property management company, essentially, in late March. It was like March 28th or something, or March 25th. We actually purchased the assets, which is the contracts, the property management contracts, from a company called Core Select, Core, Ohio. Some of you may be familiar with that company. They were doing property management, and the broker and I had a couple discussions, and he decided he didn't want to do property management anymore. They were managing about 150 units for their clients, and ended up being a great fit because our company doesn't do sales at all. We will not help you buy or sell a property, even though I'm a broker. All we do is property management, and Core Select wanted to do exactly the opposite. They want to focus exclusively on helping people buy and sell investment properties and rental properties, and they don't want to do management. So that was a little crazy to go through with that transaction right as everything was heating up and getting crazy. But we did get it done. We got all those tenants moved over, and we've been making sure to stay in close touch with the property owners to make sure that was a smooth transition for them. I don't want to spend too much time on that because I don't know, how much interest that is to the broader group here. Last topic before we kind of get into Q&A. We did apply for a Paycheck Protection Program loan, those PPP loans that have been in the news so much. We have a pretty significant W-2 count. We've got 11 W-2 employees here, including myself and the other owner. And so that Paycheck Protection Program loan was perfect for us. And we did apply through Chase, who we banked with for many, many years. And we have not been funded yet. So I think some of you may know that Chase has been in the news because it looks like they may have messed with the order of applications for that Paycheck Protection Program loan to prioritize their larger clients. I don't know if that's true. But I know that I was pretty prompt about getting them all the paperwork they needed and didn't get into that first round of funding. They sent a status update actually this morning showing that we're in the final stage. We're basically just waiting for SBA approval and funding right now. We've been approved through Chase. So we're hoping and kind of our fingers crossed that that supplementary funding gets approved by Congress so that the SBA can start issuing those again. To be honest, our business is probably going to be fine. We are seeing a slight dip in revenue. We've had a couple clients take back management because they lost their job and they don't want to pay a property manager anymore because they have free time and just want to do it themselves. And then the other factor that's affecting us is going to be late fees. The way our management agreement is set up, we generally keep the late fees if tenants pay late fees. And since we're not really charging any late fees, that is going to affect our revenue because it turns out that ends up being not a lot of revenue, but it's certainly not nothing. So that's kind of where we stand in terms of that PPP loan. I know not everyone in real estate generally qualifies for that unless you have W-2 employees. I think maybe there's some other loan programs that are more applicable. But because we do have a pretty significant W-2 head count here, it worked for us. Okay. Q&A. Who has questions? I'd love to help other people with weird tenant problems, lease questions, application questions, tenant screening. Let me know. How can I help?
Anyone? I have a general question. It's not specific, but have you been talking to your tenants? Do you have a general idea of how many have been affected by the virus? Meaning maybe they lost a job or they won't be able to pay in the future? Because it's really been surprising to me. I have properties in various places and I participate in syndications, and it seems like there's a lot of people that have rent collections similar to what you showed, 90%, 95%, not much different than what we had before. So, and that this is before most people have gotten the unemployment, most people have gotten the stimulus. So my thought is, are we going to see much worse results in May? I know you kind of touched on it that you weren't sure yet, but do you have a sense at all of that, or anybody else also wants to chime in? But Peter?
Sure. Yeah, so the way I've been handling this, I don't normally get too involved with tenant issues. We've got a really strong team here a property management team that is generally keeping track of those things. But I wanted to really get a handle on exactly what you're talking about. So I asked that all tenant inquiries regarding rent come straight to me. Basically, I wanted any question about rent, or hey, I was laid off, or hey, what are you doing about May rent, or anything like that. I've had it forwarded to me. So I've personally seen every one that our company has received, and I can tell you it hasn't been that much. I would say it's probably been in the last month, we've probably had no more than 20 people reach out of, like I said, 400 some units. So very low percentage of people have reached out with questions or concerns. Again, time will tell on May. I would expect May to be a little bit worse, but then again, most people I think have gotten their stimulus money by now. So maybe they'll be using that to pay for May rent. And unemployment has also started paying out. So definitely an open question and something I'm keeping a really close eye on.
Other questions for Peter? I didn't
Is
see
there
any.
any anticipation of adjusting rent as you flip tenants based on this COVID impact?
Sure. Yeah, that's a great question. And that reminded me of a couple things I wanted to mention. First, we waived all late fees for April just right out of the gate, just as kind of to start things off on the right foot with our current tenants. The other thing that we're doing right now is for any lease renewals, we are offering them a no increase renewal. So instead of the normal, what we normally do is like a 2.5% rent increase. Unless they're way high or way low, then we'll modify that. But normally we do a 2.5% rent increase. And for the foreseeable future, we're just doing a flat, no increase at all for lease renewals. For placing new tenants, we have not really been changing the asking rent versus what we normally would have asked previously. The demand, as you kind of saw from that earlier graph, the demand seems to still be pretty high for available rentals. I don't know if that's because we're one of the only companies that is actually showing units right now. I'm sort of wondering if a lot of other landlords and property owners are just, they don't want to meet people, so they're just not showing their units right now. They're just kind of waiting it out. And since we're part of that limited supply, we're sort of seeing an increased demand. But yeah, we haven't been needing to lower the rent, I would say, any more than we normally would here and there pre-coronavirus.
Have you seen people, are they moving out at the end of leases? I know it's such a short time, but have you had a lot of turns, or has it been fewer than normal, I guess, in the spring?
People are still moving out. I would say, if anything, it's lower than normal, though. I think more people are renewing their lease right now than otherwise would. For one, maybe because we're offering a no increase on the renewal. And for two, who really wants to move in the middle of all this and have movers coming in and touching all their stuff? And yeah, so I think, yeah, you're right. It hasn't been quite long enough to say for sure, but I think we're seeing a higher rate of renewals and a lower rate of move outs.
I think just because this is so unprecedented, sorry for using a cliche that we hear about 100 times a day, but I think tenants are just as nervous about where they're going to stand if they're not paying rent and they do get evicted once all this blows over. In fact, in my affordable housing program, and this surprised me, this month we got a payment for 3 months in advance for May, June, and July. And this is a $700 a month rental property, which means those folks are on the lower end of the socioeconomic scale. And to have gotten those, which is very rare even in a good economy, kind of surprised me. And I mean, they're great tenants, but I think there is a bit of angst out there with them as well, not just on, well, am I going to have a job to come back to, but, if I don't make my rent payment, what's going to happen after that? And to follow up on that, I'd like to ask you a question. I'm in a private mastermind group that we met via Zoom on Monday, and two of the attorneys on that group were very adamant about any variations in your normal policy they're done in writing. So I'd like to ask you, I understand that, if anybody's late, you're kind of, waving that across the board and you're not picking and choosing people, but what kind of paperwork, if any, are you sending out? So if you are going to waive late fees for this month, are you saying that it's just this month only, we're going to do it month to month? Are you saying it's going to be for the duration of the coronavirus lockdown or whatever that case happens to be? Because two attorneys that I heard speak said that we really want to be extraordinarily careful in changing policies, even if they're for the betterment of the tenant, because as the old saying goes, no good deed goes unpunished. And if in the future we would have to evict tenants, if we're making special concessions, which I think is justified personally and morally under the circumstances, we still have to be careful, legally speaking, to make sure our T's are crossed and our I's are dotted. And I'd be interested in anything you'd have to share, since you've got so many properties that you manage, regarding how you are handling the paperwork, so there aren't any misunderstandings that your tenants might think, hey, you know what, there are no more late fees ever.
Yeah, that's a great topic. Couple things I'll say there. For one, we didn't announce this late fee policy to our tenants directly. I shared it with our staff internally, and we've just been, manually deleting those late fees for tenants. It wasn't something I necessarily wanted to broadcast to all the tenants. Your attorneys are certainly correct, and there's a couple points you need to be on the lookout for. There's really two pieces to this. One is, if you deviate from your normal program, whether that's rent collection, late fees, whatever, you need to make sure that you're not doing it in like a special case-by-case basis. Because if you're allowing one tenant to pay rent late with no penalty and you don't allow another tenant to do that, a person might ask, why are you being selective? Is that, motivated by some kind of bias? And it goes on from there. So that's a fair housing issue that you need to be careful of, that you're not, like the classic example they always bring up in fair housing is some tenants have to apply, other tenants, no application needed, they can just sign the lease and move in. And how and why those decisions are made have a lot of horrible biases that are built into that reasoning. So on a smaller level, if you're waiving late fees for some tenants and not others, or if you're allowing rent payment plans for some tenants and not others, that's a fear. So the second sort of separate thing to be careful of is, if you suddenly don't enforce late fees for a few months in a row, and then you suddenly start enforcing them, you're again going to be setting yourself up for trouble, not from a fair housing standpoint, but more from just a legal standpoint. Because once you establish a pattern of accepting rent late without a late fee, you have to provide notice to the tenant before you change that pattern, no matter what it says in the lease. And this goes from everything to late fees to water bills. This is a classic one where the lease says that the tenant has to pay the water bill. The tenant hasn't been paying the water bill for 6 months. The landlord finally figures it out and tries to start making them pay the very next month. The tenant could take that to court and win, basically saying, hey, this landlord established a pattern of behavior of not requiring me to pay the water bill, so that's what I thought the deal was. If you're the landlord in that situation, the solution is very simple. You just provide 30 days written notice that, hey, starting in June, we're going to be collecting the water bill with your rent, and likewise, for the late fee, if that's what you're trying to do. You just have to give 1 full month's notice in writing, and obviously it has to be in accordance with the lease. You can't change the terms of the written lease in the middle of the term. So yeah, I think those are great points, and we are being pretty cognizant of those things as we're working through this.
Other questions for Peter?
I saw one question in the chat here from Eric. He says, do you try to pre-qualify candidates before apartment showings? We absolutely do. So as part of going through this process of doing a self-showing, they are required to fill out a series of, it's like 5 or 8 questions asking about their eviction history, their credit score, their income, do they have pets, and a bunch of other things. And it doesn't let them kind of game the system and like figure out what the minimum has to be so they can kind of, cheat it and get in and see a showing anyway. It makes them answer all the questions first, hit submit, and then if they have any wrong answers, it just says, hey, we're sorry, but you're not qualified for this property. Here's a list of other properties you may be qualified for. So yeah, we absolutely do pre-qualify. We don't want just anyone and everyone traipsing through our clients' units. The other thing that's part of that process is they have to submit their credit card details, and it will run a test transaction to make sure that's actually a legitimate credit card. So that sort of, puts the prospective tenant on the defense a little bit, like, hey, all right, these guys have my credit card information. I better not screw around and try and steal something from this unit.
Hey, Peter, quick question for you. So there's been a lot of public, I live in California, so there's always tenant rights constantly. And obviously, I don't know if you've heard about kind of the first come, first serve components that kind of gotten trickle out of Seattle, and then Supreme Court discounted it. So now it's becoming almost implied now as options. Are you guys within kind of that area starting to hear about that, see that, or have concerns on what that means on first come, first serve on the impact to tenants and potentially in your pre-screening?
You're talking about separate from coronavirus, but just first come, first serve for tenant screening in general?
Yeah, because you alluded to kind of fair housing, but just the having to fully publicize everything, and then first qualified tenant gets it, and there's no other stack rank.
Sure. So what Art is talking about here, there's 2 different ways you can screen tenants and approve applications. You can do first come, first serve, which is, hey, here's my minimum requirements for a new tenant. The first tenant who comes through and meets all these qualifications, we approve them. If they don't meet the qualifications, we deny them and we move on to the next applicant. The other way to screen tenants, which is I think maybe the more traditional or old school method, is take a whole bunch of applications, get a whole bunch of applications for a property if you can, and then pick the best tenant. Pick the most qualified tenant, highest credit score, whatever your criteria that you're using is. And the first come, first serve is the sort of becoming more and more the industry standard and the safe way to go. Because again, you open yourself up to discrimination complaints, possibly legitimately, if you're taking a whole bunch of applications and then picking the quote best one. And of course, the question is, what's the best one? How are you determining that? And also you run into issues more on a practical side. If you're charging a whole bunch of people application fees, but only approving one, you're gonna have a bunch of angry prospective tenants saying, why did you charge me an application fee when I didn't even get a chance to have the property? We do a first come, first serve. We have a set of minimum application standards that we rigorously enforce. The first qualified tenant to apply to our property will get, we'll extend an offer to sign a lease. I think, Art, what you're asking is that becoming more prevalent? I think it is. It's spreading organically right now as property managers and landlords are becoming more aware of the risks. But I haven't heard anything about legislation in Ohio regarding that. And I stay fairly up to date on those things when I can. So I'm not sure that we'll see that legislated here on a state level. Wouldn't surprise me at all if it gets legislated on a city level. I could see the city of Columbus passing something like that, definitely.
Other questions? All right, I'd like to, not to put anybody on the spot, so I won't name names, but I know that we have, just seeing the number of people here, we have some people who have rental properties, and we have some people who do flips or wholesale. Would anybody like to comment, just for the good of the group, on how those things are going? Or if you have rental properties, Are you experiencing collections like Peter is, like I am in the 90%? If you're doing flips or wholesales, are you able to buy, sell properties? Or things still moving? Just to give people a sense of what's going on in the market. If anyone would like to chime in, that would be interesting to the group, I think.
Hey, Jim, this is Chris Stanley. I'll chime in on that. My wife and I have 31 units, and we collected all of our rent except we have one tenant who has not paid the full amount. They're still on a payment plan. We expect to collect that, however, they're just waiting to get their unemployment. There was a couple, they're both Cameron Mitchell employees. And so, the income just ceased, and it took them a while to get their unemployment. They are a $1,225 a month rent. We collected $800 of it up front, and then the remaining $425 is coming in. And then of our 31 tenants, we only have one other who hasn't paid, and they're giving us the silent treatment. So we'll see how that one plays out. That's a lower end rental, $450 a month rent. So not surprising, but overall, right on line with what Peter's saying, about 90%, probably a little bit better than that so far. And we're just, holding our breath here, seeing what happens for May.
Cool. Thank you. Thanks for sharing. Anybody else?
Yeah, I'll go. So we have 44 all pure Class C rentals on that part, with about 40% Section 8. So obviously Section 8 is what it is, the beauty in some parts of this aspect. But the other part is right around, I think we're right around between 85 and 90%. So as of last week.
Cool. And Art, are you, you said you're in California, but your properties, are they here in Columbus?
Yeah, all 44.
And are those, just curious, are those single family or are those multifamily?
No, 100% multifamily.
Okay. Excellent.
And for what it's worth in the insurance world, so far this week I've done 2 fourplexes and a duplex. So there's things that are out there moving.
Okay.
Properties are absolutely moving. I just came back from a closing at 4 o'clock today, where I had a duplex on the far west side of historic Franklinton. When I sell, it's historic Franklinton. When I buy, it's the bottoms. So for those of you who are familiar with the west side, and Remington Lyman's not on the call, it doesn't look like, but I appreciate his help. And I want to send a big kudos out to Mike Geffert. We've been working on a quiet title issue for about 6 months with MERS, and we finally got that thing wrapped up last week, and we closed today, and I got my full asking price. I mean, I discounted a few grand for some RFRs, request for remedies, but I think it's probably going to be the highest comping property north of Broad on the far west side of Franklinton. So, and there's a lot of demand out there. In fact, I'm trying to sell everything I've got, and I've been trying to do that for the last 3 years because the market's been so high, and I'm very convinced, and I don't mean to be a negative Nelly and bring things down to a more somber note, but the people that I talk to in the I guess the circles I run in, a lot of I have friends that have 350 units themselves, not partnering and syndications and stuff. They own them. They're on the hook, and they're really concerned about what's going to be going on. Late summer, early fall, there's talk, if you do any amount of non-mainstream media research, there's a lot of talk that we may have a second round of this, and who knows. None of us have a crystal ball to predict the future, but as of right now, the market, there's a lot of demand. A buddy of mine has another property on the south side, just went into put it on the market Friday of this week or of last week, had I don't know how many showings, and went into contract. I was asking 175. Full market value is 175. He got an offer at 172, and I think there's 1 or 2 backup offers, and he's in contract, and that's an owner-occupant. Mine was an investor property. This was an owner-occupant property. So between today and yesterday, it seems like the market at this moment is still pretty strong if you're a seller, and I think that's going to continue based on my experience and the demand I see from other investors. Most of the stuff I'm not even listing. I don't even have to list on MLS right now. I do pocket listings with a handful of realtors that I know. and my stuff is selling quickly. And again, thanks to Mike Geffert for helping out on that quiet title action. That could have been a real long-term big problem, but he came through with flying colors. So thanks again, Mike. Thanks for making sure that my closing was able to take place today as it was scheduled.
Well, thanks, Brian. Anybody else have any thoughts on that? And also, if anyone wants to comment on what they're seeing in lending, are people still private money lenders, hard money? I know banks are having you're having a hard time getting money from banks, but anyone have anything to say on that?
I can follow up real quick on that CARES Act.
Yeah, go for it.
Yeah, that applies to anyone who has a loan that is secured by the federal government. So if you have a Freddie or Fannie loan, make sure that your lawyer knows that before you try to serve eviction papers.
So to be clear, you cannot evict if your property has a government-backed loan.
That is correct.
Now, is that true even if you're paying the mortgage and you're not taking any handout from the government or any loan or anything else?
It applies even if you're not taking the forbearance from the government.
Thanks for the clarification.
You're welcome.
Okay. Any other? I see there is a question. There we go. 7 units all paid on from Tim. All paid on time, exempting one who paid partially 2 weeks late. Supposedly be up in May. Excellent. Thank you, Tim, for that. Good. Anybody else have any comments? We're trying to get a little bit of dialogue here, just to share experiences with what people are seeing. No? Okay, we've gone almost an hour, so that's pretty good. Okay, here's another one from Tom. 11 units, 1 unit contacted me letting me know they both were furloughed, so on rent deferral payment plan. Okay, excellent. So it seems like, you know, I think we'll know a lot more next month, obviously. I was shocked personally that April came in so good. You know, you hear so much about most Americans are $400 something away from disaster, but they're still paying their rent somehow. And that was before the coronavirus. So I guess things are looking better than I expected, and we'll see how May goes. A couple of announcements real quick. Peter, first of all, thank you very much for presenting and for being so thorough. We do appreciate that. I don't know if you can see my screen, but I did put your picture up in my background in honor of the last time you presented. I don't know if you noticed that or not.
Thanks, yeah.
But I wanted to reiterate, because I kind of screwed up the beginning and didn't let half of you in. That's a new thing where I guess I have to admit people. So my apologies, but you might have missed that I reiterated what Michael Geffert put on Facebook about the Smokehouse Brewery. Now that's exactly what he just posted on the chat. But yeah, we're not going to Smokehouse anymore. The restaurant workers, you know, those are one place that's getting hit really hard. I don't know how those people are surviving, but if we can help the restaurant stay in business, so we'll have a place to meet whenever we can get back together. If you can afford it, if you have some extra money that you can pay it forward and buy a gift card to the Smokehouse, that would be great. And then when we get our meetings back up and running in person, then you can use that gift card to buy Michael a beer. All right, Michael. Okay, so I think that was the last thing I had. Oh, the other thing on Facebook, I'd like to see if we can do some more dialogue if you have questions. I posted a question there this week because one of my property managers claimed that they couldn't share with me the reason my tenant hadn't paid rent because of the Fair Housing Act. And I got a couple of really, really good responses from people saying, that's ridiculous. I can see it on your face, Art. Those are the kind of responses I got, that makes no sense. So, you know, they were down in Tennessee, and I called the owner there, and he was cussing me out and telling me all kinds of stuff, but he had no clue. Then the tenant paid, so then it doesn't really matter. But I think the overwhelming thought was that you're allowed to ask your tenant why they can't pay, or the property manager is allowed to share that with me. But if we can get more dialogue like that, I think it's really helpful because I didn't know, and the information I got from you guys was helpful, so I appreciated that. The last thing, I'll pause here for a minute if anyone has any last comments or anything they'd like to share. No? Okay.
Yeah, well, hold on. I don't want to kind of take over things, but you asked for feedback on private lending. I've got 6 of my 7 private lenders that I use on a regular basis, are very active, same terms, same conditions, nothing's really changed. And right now, probably like a lot of you, I've got more capital available trying to find, some really good deals out there. So if you have used private lenders before, I would encourage you, especially if you're looking at some deals, I'd encourage you to reach out to them and see if they're still in the market. Because my guys, especially after this stock market turmoil, they're real happy to put their capital to work in real estate. Thanks.
Great. Thanks, Brian. All right, I will pause again for 10 seconds if anyone else has something to say. All right, I really appreciate everyone coming out. We had real good attendance. Thank you, Peter. Thank you, everybody else who contributes. Our next meeting will be May 19th. If you have suggestions for something that is relevant, to the coronavirus, I think is what people are most interested in. If we don't have something that's relevant, I'm going to go back to the list of speakers that we had scheduled previously, and we'll get the next one up and try and maintain these meetings. I think it's important to stay connected. So you have our Facebook, you have these meetings. So just stay healthy if you can, stay home and help each other out. Thank you all very much for showing up, and we'll see you in a month.